This particular video is to inform you about the reasons why you shouldn't be buying individual stocks. Now, I have to make something clear. The truth is, I do invest in individual stocks, but there's something that you should know about, because if you could understand this concept, you will be a better investor. So stick around and watch this video all through. Now, the one thing that we always want to do as an investor is to make our money work for us. And the goal is to have that money invested and let it just increase in value, either through dividends or through capital appreciation of that stock. Over time, companies do get into situations where they start to lose traction of the industry they are in. And that is exactly what I'll be sharing with you. Now, I have to make something also clear. The information I'll be sharing with you is not just my own ideas or concepts. This is actually information that has been researched and documented over time. Now, before we go on, let me introduce myself. My name is Stephen Ojo, and on my channel I talk about investing and aviation. So if you are interested in subjects like that, kindly subscribe to the channel. And also, if you have any questions or concerns, leave them in the comment section below. I will love to hear them and respond to them. The information that I researched to make this video are actually linked in the description below. So if you're interested in reading them yourself, feel free to do that. My goal is to make this information as concise and straight to the point as possible. So I'm not going to be spending much time going over all the details. So the truth is, there's much more to it. Now, I don't know how long you've spent on this earth, but one thing that we will know that human behaviors change over time. The fact remains that human taste, decisions, and habits often change. And this is where companies come into it, because every company brings their own concepts and ideas to serve the consumers. And as long as they get it right over time, they will always win. Now, according to research that was conducted by McKinsey, this research was conducted back in 2015. And the truth about this information is that the information is still valid till now. According to their research, they found that the average lifespan of a company on the stock market was around 61 years in 1958. Now, at the time of this research, which was around 2014-2015, the average lifespan of a company on the S&P 500 was around 18 years. Now, according to the same research, they believe that by 2027, the average lifespan of any company on the S&P 500 will be around 12 years. The baffling question is, why is this the case? Now, to expand on this information, there's a term called creative destruction. This term is not something that I made up. It's actually a well-documented information. But basically what it means is the innovative process of creating new processes or products to replace the older ones. And that is exactly what leads to the short lifespan of these companies. Back in the 1960s and 70s, information didn't spread as fast as they do now. You got to think about the information that we have at our fingertips. Just by doing a Google search, we get most of the information. Now, these same innovative products that are put in our hands have actually made things harder for companies to survive, because you got to remember, when a company in China develops a new product or a new software that does something better than the previous one, guess what? Another company in the United States is either imitating or doing something even better. Now, this creative destruction is something we've seen in all aspects of our own lives. If you look at the phones that are being made nowadays, they're often done to replace the previous ones. Same thing with cars. Look at Tesla today, how it's performing because of the innovative ways of designing their cars. Think about social media as well, like Facebook, Instagram, and Twitter. All these companies have created something almost out of nothing, because you got to remember that information was available on the internet. But by bringing everybody together into one space, well, you are able to disseminate information at a more efficient way. The other thing that makes this very complicated is the fact that human behavior changes over time. Our habits and interests will often change, which means that these companies must be ready to adapt to those changes. An example of this is to think about those big phones that were made in the early 2000s. They're called GSM. Wow. So you got to remember that those phones were made to replace the older ones, which were the landlines that had the cables and you have to always spin this round thing to make it work. But then look at the phones that we use nowadays. We all went from those big phones to the smaller versions of those phones, and then we moved on to the flip phones, and then we moved to the touch screens, and now we have all these smartphones. Another interesting discussion that was brought up in some of these articles was the changes that happened to the food delivery. If you remember, back in the early 70s, 80s, and 90s, even to early 2000s, there wasn't any way to get food delivered to you by just a common stranger. But nowadays, that is something we can easily do, and within minutes, our food is ready. What do we do? So why am I sharing all this information with you? Well, the reason why I'm bringing this up to you is for you to understand that the company that is doing so well today will not be doing so well tomorrow. It is a given fact, because the average lifespan of every company is being reduced over time just because of all these innovative process called creative destruction. Now, I'm going to pick a good company that performed so well and they had everything going for them in the late 2000s. This was Research in Motion, Blackberry. If you know what Blackberry is, then you know what I'm talking about. Blackberry was that smartphone that was used in most enterprises, corporations, and companies, and also in the hands of a lot of people. In fact, the president of the United States at the time, Barack Obama, used Blackberry. They had very good security systems and very intuitive keypads that made it very easy to communicate through emails. But then the truth about it is that BlackBerry is almost nowhere now, although they are still doing okay, but they are not as competitive as they used to. And the reason is because of this creative destruction. Now, going into that crash of 2008, the price of BlackBerry was around $138. And guess what happened during the crash? Well, the price dropped to around $40, $50 or so. Now, the truth about it is, what do you think common investors would do? Most of them loaded up on that stock thinking this is an opportunity. A lot of people bought these stocks thinking it's going to go back up. Well, it did, and it went up, but didn't recover to those highs. The highest price it got to after the crash of 2008 was around $78 and never made it back to $134 that it was. Now, guess what? Going into 2011, 2012, the price continued to drop even further because at this point, people wanted something new, people wanted something different, and who was bringing into the table then? Microsoft and Apple were stepping into the game of mobile phones. Mind you, at this time, the price of Apple stocks was around $20 or so. And when Apple started stepping into the game, Apple crushed BlackBerry, which led to the stocks decline over time. Now, the question is, with the companies of today, the big companies of today like Apple, Microsoft, Google, Facebook, and Tesla, what are these companies doing to remain active in this game? I never thought about that. Now, one thing that has led to the success of most of these companies is the fact that they listen to the consumers. Like Apple, they track all your activities on your phone to see the human behavior, your pattern. They can see how much you read, how much you listen to music, how much activity you want to perform in terms of physical activity and so on. And with those data, they're able to innovate their products to make it better. And same thing with Facebook and Google. Your browsing habits, the things you watch, the things you like to spend time on are being tracked, and this information are used to build product for us. So is this a bad thing? No, it's not, especially for an investor, because that means these companies will continue to remain innovative. But there's always something that we are not aware of, and that is how well the company is managed, because that is the important factor. And this is why when the company CEO is being changed, especially from a good guy to another person, a lot of investors do worry because you're worried about the managerial aspect of these companies. So what are your recommendations then? So I believe you understand all the concepts that have been shared in this video, and there's more if you're interested in reading them, which I link in the description below. But there are investments that you can always put your money in that have stood the test of time. The first one is the business. If you can start a business that serves the consumers, then you are in the game. Obviously, you have to remain innovative and creative and listen to your customers in order to remain in business. The second investment you can always think about is gold. Now, the truth about gold is that it's existed for so long and it's always held its value. So if you are considering putting some gold into your investment, that's a way to also manage your risk and reduce your chances of losing all your money. Now, a recommended type of investment to use to buy gold are ETFs. And an example of one is the Gold Mini, which is GLDM. You can look it up. And this is one that has actually performed so well even during this year. That is something you can add to your portfolio to diversify your portfolio and minimize your risk as well. The next one that we all know is real estate. We all know that real estate has always held its value, especially if you buy it at a good price. Over time, the value increases, and that means that if you sell, you can always come out ahead. The other thing is multi-family real estate. If you could get your hands on a multi-family type of asset, then you are in business, because if you are at a good location, you are probably to cash flow from that type of asset. And the last one I'm going to share with you are index funds. Well, you already know what index funds are, I believe, if you're investing. But if you do not know, index funds are basically a basket of companies that tracks an index like the S&P 500 or like the NASDAQ. So if you could buy an index fund and put your money in this, even if one company goes out of business or loses its performance, well, your investment won't just go down. You will still have the ability to profit from other companies. Well, I hope you have gained one or two things from this video, and I hope that you've learned some information that I believe will make you a better investor. Again, investing in one company is not bad, but you got to remember that the average lifespan is decreasing and shrinking over time. So if you could get into a company that is just getting started and ride it out, that might be a good way to make some money, but over time, companies won't perform so well. A good example again, Coca-Cola. Coca-Cola is doing well, it's doing okay, but the point is, with the amount of time this company has existed, wouldn't you have thought that these companies should be worth a lot more? Well, that's something that you should think about. Please, if you have found value in this video, please give it a thumbs up. And also, if you haven't subscribed to the channel, please consider subscribing to the channel. It helps me a lot. So thank you for watching, and I'll see you in the next one.